This is AI Command App News for Tuesday, July 7th, 2026. 5 stories moving business, markets, and the AI economy today. Let's get into it. First up, Anthropic is taking its AI coworker mainstream. Starting today, Claude Cowork, the company's agentic work platform previously limited to desktop, is rolling out on mobile and web, first to Mac subscribers, with other paid plans to follow in the coming weeks. TechCrunch describes the shift simply: start a task from your desk, get status updates on your phone, and pick up the finished output later, even if your laptop is closed. TechCrunch also framed the launch as the coding agent wars spilling into the rest of the office. The business takeaway: autonomous AI agents are no longer a developer tool. They're becoming an always-on layer of white-collar work, and vendors are racing to own that layer. Expect enterprise software budgets to start shifting from seats to agents. Story 2. Amazon is going to the debt markets to pay for its AI ambitions. The company is raising at least $25 billion in a bond sale, its latest debt raise to fund massive investments in artificial intelligence, and says it won't issue more debt in 2026, according to CNBC. Notably, Amazon stock climbed on the news. Investors aren't punishing AI capital spending. They're rewarding companies that can finance it cheaply. But it's also a signal. The AI build-out has grown past what even big tech cash flows comfortably cover. When the world's most sophisticated operators start funding compute with bonds, the AI race has officially become a capital markets story. Story 3. The chip trade wobbled. Samsung reported a profit surge, but after a 145% run-up in the stock, results fell short of the market's sky-high AI expectations, and chip stocks sold off across the board, with Micron and other memory names falling, per CNBC and Investors Business Daily. MarketWatch put it bluntly: after a record-breaking quarter, semiconductor valuations are coming under scrutiny. To be clear, this isn't an AI demand problem, it's an expectations problem. When great isn't good enough, positioning is stretched. The lesson for investors today: in this market, beating earnings isn't the bar, beating imagination is. Story 4. Microsoft is tightening the belt on AI. TechCrunch reports Microsoft is the latest Silicon Valley giant to cut AI spending, in its case by relying more on its own in-house models rather than paying for outside ones. It comes as Microsoft layoffs reportedly hit game studios Bethesda and id Software hard, as much as half of some teams, according to Ars Technica. The pattern across big tech is now unmistakable: spend aggressively on AI infrastructure and claw back costs everywhere else, including headcount and third-party model bills. For business leaders, Microsoft is telegraphing the playbook. Dependence on a single outside AI provider is a cost center to be engineered away. And finally, the macro picture. Oil prices jumped after the U.S. revoked Iran's authorization to sell oil, canceling a June sanctions waiver following attacks on tankers near the Strait of Hormuz, and CENTCOM says U.S. strikes on Iran have resumed. Energy is back on the board as a market risk, just as tech wobbles. Still, speculators remain constructive. Traders on the prediction market Kalshi see the Nasdaq 100 ending 2026 above 30,000, a cooler but still positive second half after the massive rally off the post-conflict lows, per CNBC. So watch oil, watch chip earnings expectations, and watch how much of the AI build-out gets financed with debt. That's your AI news for today from AI Command App. Same time tomorrow.